Spain received strong demand for its largest debt sale since March, raising €4.8 billion. Nike's board approved an $8 billion buyback program that is expected to return capital to its shareholders over a 4-year period. I'm Taylor Schrantz, and the Morning Call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey with TheStreet, and together we bring you the Morning Call Express. Futures are pointing down this morning. We've got some weak news out there today. The PMIs across the globe are weaker than normal. Earnings pre-announcements weren't so great. And then UBS downgraded some of the banks. So what are you expecting going into trading today, Scott?
I was expecting the futures probably to be down more than just 3 to 4 handles, and they were down a little bit more earlier on. But a lot of the news headlines that have been coming out, we know that growth is slowing around the world. We know that this earnings season is not going to be great. This is why all the central planning is taking place. So we have to really just continue to monitor the action. And if you look at the chart of the SPX, you will see that we still are in a very, very strong trend. This is the macro trend that's been in place since October 4th, and then the re-energized move this year after this decline in the second quarter. And here's this cup and handle pattern we keep talking about, and look where we are. Everyone always wants to call a top, and right now, you really can't do that yet. If you want to take a closer look, we've been talking about the 8-day moving average. There are some bulls that are a bit spoiled up here because it's been very easy to hold stocks. So why not, touch the 8-day, which is 1451, and you could even come in and test the 21-day, which is at 1432, and still be fine. So overall, macro as far as the stock market, things are moving well, but stock selection matters, entries and exit matter. You can't just throw a dart out there.
Oil has been a different story. On Monday, we saw a potent move down in that one. It's been down the last 2 days. It's been a laggard, though, all year. What would you do with the stock? Do you trade it for a short?
Well, at this point, I think you can't just get in there short. But on Monday, the market always tells you something. And people were trying to say, oh, my goodness, look at the flash crash in oil. Look at what just happened to the USO. Everyone was trying to figure out why it happened instead of looking at the what happened. And if you go to the chart tells you what happened. And what happened on this day is it broke this uptrend that it's been riding since the low. What also happened on this day was a potent down move that engulfed about 6 days of activity, showing you strength in that direction. And then you had no bounce back, right? It didn't even take back more than a third of it. And then yesterday you had your follow through. At this point, it's off a little bit. I would say use this as your pivot. You might be able to buy it for a cute bounce, but overall, this seems a bit broken. And I do think at some point, lower oil will be seen as a positive for the market, just not a positive if you're actually long it.
Right, and yesterday we saw a lot of action in social media stocks, which was a nice, interesting thing to see. Facebook is one I know that you've had your eye on for a while.
Yeah, well, ever since they made the big news that Zuckerberg's going to stay for a year, the company was buying back some stock. Technically, it started acting much better. You go to the chart. This, you had to really be tactical in order to get a good trade starting here or maybe even right there. Yesterday, we tweeted about adding to it above 2205, so overall a very good trade. The more high-class stock is your LinkedIn. LinkedIn also rewarding macro investors as it made new highs, way back when, and it also looks like it's ready to go. 125 is another pivot. I think about 3 months ago when it was around here, I talked about potentially 140 to 160. I still think that's in play. And then you also have, when the group goes, you have some cute trades in your Groupon, maybe in your Zynga, in your Yelp, and some stocks like that. So, there's always some opportunities out there. It just also depends on the day.
Speaking of stock selection, high beta tech still remains strong. Apple staying above $700 for the second day in a row.
Yep, Apple right now, still looks good. It just had a 30-point move since, they unveiled their iPhone 5 tomorrow. You can get it in its store. Mine comes here on Monday. I think that the highs of the year is not in lately. It's been a little choppy, but I think you stick with this one. Support is around 695, but at some point I do think it stretches, and I think north of 750 isn't unreasonable at some point this year.
And Google also seeing great moves this year.
Yeah, Google hit 727 yesterday. Everyone was complaining about the stock market. Guys in Google weren't complaining. Stock selection matters. Also, Amazon looks okay. So there's still a lot to like out there. You just have to be in the right group and use a tier system to manage your risk exposure.
Well, stay tuned for the long form version because we're going to cover all of this and more in that.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The two-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit t3live.com and click on the education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.